Hello and welcome to Introduction to Forex Market by Golden Pips Generator. My name is Human. I'm here to help you guys understand the Forex market, the basic of it, how do we actually trade the Forex market, and everything you need to start your journey. Before we started, I want to congratulate you for making the change on your life. I personally don't believe in high level of educations. I believe in self-education, and I hope that you're gonna make it through where you want it to be. And I'm just gonna confirm with you that this Forex market is where you actually can make change on your life. So as you can see, the ways to contact us are Instagram page, Golden Pips Generator. You can follow us there. You can contact me using Telegram app or email. You can see the addresses there. So before wasting time, let's start it. So what is market? The market is where you can place your buy or sell orders of available trades instrument. What we mean by trade instrument is going to be on next slide. So you can have access to the market using brokers. So brokers going to be the one between us and market. We need brokers. Without brokers, we cannot trade as a retail traders. You can win or lose money in the market changes when the market changes, like going up or down. But don't get me wrong, market is not a casino, and we don't gamble here. This is an investment opportunity. What do we mean by that? There is people who think Forex is casino and they can gamble. True, they can come and gamble, but that's not trading. That's gambling. So we're gonna teach you how to actually trade, not gamble. I certainly wanna tell you that if you are a gamble guy, Forex is not your thing, man. You gotta go to casino. For Forex market, there is a lot more than like just usually gambling around. So if anybody tells you that Forex is gambling, trust me, they have no idea what is Forex. So what we can trade in the market, these are the trading instruments. There is stocks, there is commodities, there is index, there is cryptocurrency, and fiat currencies. I'm just gonna go very brief on these. The stock is like companies. You buy the share of companies like Amazon, Facebook, Apple, Uber, and thousands of more that is available to buy the shares. So that's the stock. You buy it. If the company goes well, you'll make money. And if not, you lose money. Commodities is like silver, gold, natural gas, crude oil, and you certainly can trade them. There is index, which is an indicator, measure of something. For example, the strength of US dollar, a measure of United States dollar. So it's not compared to any other things, just United States dollar. That's index. And we have cryptocurrency, which is pretty updated compared with stocks and index. That's virtual currency designed to work as a medium of exchange. The main difference between cryptocurrency and fiat currency is that the cryptos are untraceable, which fiat currencies are not. And cryptocurrency is a whole different thing that if you want or you're interested about it, DM us and we'll get you there. But for now, what we focus is on fiat currencies. Fiat currencies, we mean just a regular currency you probably know of, depending on where you are. It could be US dollar, Canadian dollar, euros. So when you want to travel from country A to country B, you need to exchange your money from the currencies of countries A or to currency of country number B, not the number. But anyway, so that's what exactly we're gonna do in the Forex market. We're gonna exchange the currency to another currency, but in pair. So in the pairs, let's go to the next one. But what do we choose Forex market? Why not stocks? Why not index? Or why not cryptocurrency? So the Forex market is the world's largest market in terms of daily transaction volume. It's open 24 hours for 5 days a week, and you can literally trade anytime that you're willing to do. That's so for now, world's largest market, open 24 hours, 5 days a week. And the third is leverage. Leverage is compared with like stocks and commodities. The leverage is its advantage that broker will give you in order to trade. So they'll let you trade with accounts larger than the amount of money that you have and make money with more money that you don't have actually. That's leverage. So if, for example, you invest $100 and you want to trade it, broker can give you leverage up to 1,000%. Means you will trade with your $100 with the amount of $100,000. So 100 times more. It's or 1,000 times more. That's really depend on your broker. Brokers offer different leverages from 1 to 1, 1 to 20, 1 to 50, 1 to 100, 1 to 500, and 1 to 1,000. The more and bigger the leverage equals the bigger risk because it's more money you're investing. So you really need to be careful about the leverage. I personally trade with 500 leverage, but make sure you trade with this type of leverage just when you know what you're doing in the market. The next reason for us is global market participants trade more than $5 trillion in a day. This is about, like, this is from 2016. Now it's up to $7 trillion a day. So what that means is so every day there is $7 trillion moving from account A to account B, from the loser to the winner. And so I don't know any business that has this kind of volume in their business, like $5 trillion. What I can tell you about this is $5 trillion just gonna show you how unlimited amount of money you're able to make. The Forex market is the market that you have no limits for making money. You can make enough money for your whole year in only one trade. You can make the salary of a doctor in only one trade. You can make whatever you want, but at the same time, you can lose exact same amount. So it's a very risky business, but if you know what you're doing, that's when you see the results. And I don't believe in reward without risk. So if you don't want a reward, don't risk. But if you need the reward, then man up and risk, man. So how do we trade Forex? So Forex, which is currencies, we have major currencies and we have exotic currencies. Major currencies, we're referring to US dollar, euro, British pound, Canadian dollar, Australian dollar, Swiss franc, and Japanese yen. And the exotic currencies are, these are examples. There's a lot more exotic currencies. The examples are Turkish lira, Mexican peso, South African rand, New Zealand dollar, and Chinese yuan, and Singapore dollar as well. As I said, there is a lot. So we trade Forex as pairs. Means you can't just trade US dollar. You need to have it with another currencies. So for example, US dollar to Canadian dollar. So we trade USD CAD. It's a pair of ours. So USD here is base and Canadian dollar is quote. That's what their name is. When you buy or sell a pair, you're buying or selling the base currency. And you do the opposite when you close your position. I'll explain that in a bit. So there is different type of order. You can better buy or sell a pair. When you buy a pair, you're buying the base currency and you're selling the quote currency. So let's say you're buying Euro USD. Means you're buying Euro and you're selling your US dollar. And let's say GBP JPY. When you're selling it, you're selling British pound and you're buying Japanese yen. But how does it work? So let's say your USD rate is 1.34950. Means 1 euro equals 1.34950 US dollar. When you buy Euro USD, means you get 1 euro and you pay 1.34950 US dollar. So here's another example. Let's say we're talking about US dollar to Canadian and the current rate is 1.30. You buy 1,000 US dollar. What you pay? It's Canadian dollar. And how much? Because the rate is 1.30, so it's 1,300 Canadian dollar that you need to pay in order to get 1,000 US dollar. So you're buying US and you're selling your CAD. And the rate goes up, let's say, to 1.340. Now you exchange your US dollar that you bought with your Canadian dollar back to Canadian dollar. So it means now you're selling your US dollar and buying Canadian. Rate is 1.340. So you'll get 1,340 Canadian. Well, you paid 1,300 and you got 1,340. That 40 is your profit. And this is exactly how Forex market works. You buy or sell in the right time to generate profit. Just like this. That's exactly what happens in a real life, and that's exactly what happened in the Forex market. You buy and sell. So in order to trade, technically you have to buy something and later on sell it. That's when you generate your profit. In Forex market, when you actually started trading, you start trading with opening a position of a buy. And then after the time that rate is in your favor, you close your position. When you close the position, it's technically when you sell. So 2 transactions will happen in order for you to make money. You choose buying and then you close it. So when you buy, broker will buy that pair for you using the quote currency. And when you close it, they will do exactly reverse. And that's how profit will be generated. So that's it for now. We're gonna close it right now and I'm gonna start it from the next episode. But first thing I wanna tell you before I go is if you don't understand any parts of what I just said, repeat this video. Repeat until you get what exactly I mean. That's a Forex market. You're investing on yourself. You're educating yourself. It's absolutely okay if you don't understand it. But there is a difference between school and self-education that here there is no teacher to tell you what to do. We're just gonna give you the education, we're gonna give you the information. It's your job to go over it over and over and over till you get it done. If you didn't get it till now, don't bother playing next episode. Just replay this. Thank you for listening for now. I'll see you in the next episode.